Hey everyone, Daniel here. In today's video, I want to talk about the 2 mistakes that you should avoid when planning for your insurances unless you want to flush your money down the toilet. The first mistake is when you copy and paste your friends or family's insurance portfolio, and the second mistake is when you continue to blindly pay and service for your existing policies. Without further ado, let's get started. Mistake number 1. Copy pasting your friends or family's insurance portfolio. Now the thing about this is that it often happens as a result of a conversation that you had with your friends or family. During the conversation, chances are is that your friends or family members spoke about the topic of insurance and you casually asked them about their own portfolio and their own recommendation. And before you know it, you end up purchasing the exact same insurances that your friends or family had purchased without giving much thought to it, as you felt that you need to get yourself insured and you had the social proof from your friends and family members. Now there are 2 implications of copy-pasting your friends or family's portfolio. The first implication is that you run the risk of paying for things that may not be suitable for you. You see, planning for your insurance should be the same as tailoring your clothes. Everything should be measured in fine detail based on your own unique measurements and situation. Copying the insurance that your friends and family had bought is kind of like buying the same size shirt as them, even though you may have a very different body proportion, right? The second implication is that you may end up paying a higher price for things that you do not need, or worse, for no good apparent reason, as you completely skip the process of comparing the products available today. You see, competition exists for a reason. While the insurances available in the market today are similar, they are by no means identical. Different companies will have different strengths and weaknesses, and most companies will compete by either differentiating themselves by having more benefits or compete by being the lowest cost provider. At the end of the day, what matters the most is that you know and you understand what you are paying for. What your friends and family members have bought might not be something that you want to be paying for. Mistake number 2. Blindly paying and servicing your existing policies. The next thing that you should never do when it comes to your insurances is to blindly pay and service for your existing policies. Now this often happens to people who blindly take over the policies that their parents have bought for them, maybe 20 to 30 years ago. And it also happens to people who do not have the habit to do regular policy reviews. So what are the implications of blindly paying and servicing your existing policies? The first implication is that you may be paying for coverage that may no longer be aligned with what you need at a given point in time, right? Things change and situations change. As we progress and as we age, the type of lifestyle, responsibilities and liabilities that we are dealing with would change as well. As a result, the type of risk and economic consequences that we have to deal with tomorrow might be different from what we are dealing with today. Now this is especially so when you experience significant life-changing events like settling down, getting your property and having your first kid, right? If you were to just blindly pay and service for your existing policy without taking a look at whether or not it is still suitable for your current situation, you will never know if what you are paying for today is what you really need. And this creates unknown gaps or inefficiencies that will cause problems down the road. If you need more coverage than what you have today, you will face a risk of depleting your savings should anything happen to you in the future. If you have more coverage than what you need today, you are wasting your money by paying for unnecessary coverage when that money could have been channeled to accelerate your retirement. The second implications of this is that you may miss out on promotions and innovations in the industry that may have created a situation or opportunity where the newer insurance provides either better benefits at the same price or the same benefits at a lower price as compared to your existing insurance. Let me provide you with 2 examples based on my personal experience. The first example is a situation of a policy that was handed down by one of my client's parents, which would have cost him a total of $69,000 over his lifetime, as compared to a policy that he could have gotten today, which would have cost him a total of $42,000, all for the same amount of coverage. All of this had happened because the newer policy payments are limited to a certain number of years, which is either rare or non-existent in the past. The second example is a situation of a policy that was bought with and without discount, simply in a short span of a year. Now, it is clear that while the age of my client had increased over the year, the cost of insurance for the policy with the discount is still lower than the policy that he had bought a year ago, simply because of the perpetual discount promotion that was ongoing then. Summary. So there you have it. As much as we don't like to talk about insurances, we need them in our lives to protect ourselves and our families from financial hardship should anything happen to us. And like it or not, these insurances aren't exactly cheap, since the risks that we are transferring aren't exactly small either. It could easily go up to $500,000 to $1 million in coverage. So make sure that you're not flushing your money down the toilet on unnecessary or uncompetitive insurances. You need to know what you are paying for to avoid buying things that may not be suitable for you, or paying for features that you may not even need in the very first place. You should also be on your toes when it comes to reviewing your insurance portfolio, so as to ensure that what you're paying for today is still relevant to you and you're not missing out on any current opportunities that could help you make your insurance portfolio more cost efficient. Now that's all I have for this video today. If you need a professional opinion on your insurance portfolio, you can consider engaging an independent financial advisor to help you make sense of your insurance plans. To find out more information about how you can benefit from my financial and insurance planning services, you can check out what I do on my website and reach out to me directly. The link is in the description below. Do remember to subscribe to this channel to stay updated with the weekly uploads. Stay safe, and I hope to hear from you soon.